Well, one of the key themes that is emerging at this year's conference is truly that we're going to need a lot more energy, particularly to feed the AI and data center boom that we know exists and that's going to continue to grow. So one of the themes that we continue to hear from our members is we need a lot more energy going forward. And what that means is that we're going to need a lot more oil and gas in particular. So I think the growth story is going to be enormous for the oil and gas industry going forward.
You know, when it comes to more oil specifically, as we well know, the administration and President Trump's mantra of drill, baby, drill that he has repeated here, how willing are your members, though, to increase production when we've got oil prices that continue to fall here?
Our industry is poised to grow significantly this year. In fact, based on just what we're hearing from our membership, we expect about $200 billion in investment in the United States just this year alone. The world is going to require $600 billion of investment just to keep oil production at its current rate. So we expect continued growth here in the United States. We reflect on some of the numbers that we've seen out of the Dallas Fed that says that 57% of oil executives expect growth this year. So we expect continued growth in these markets, particularly on the natural gas side as well, which we're going to need a lot more of if we're going to supply the needs of the world, an energy-hungry world that continues to grow.
Right, definitely natural gas playing an important part. Oil specifically, though, we're at just about at record production here in the U.S. Are we going to see an increase in oil production specifically this year?
We are close to 13.5 million barrels of production a day. That is record levels. And I expect that, based on the independent analysts that we've seen, the Energy Information Agency at the Department of Energy actually expects that we're going to grow that by the end of the decade to almost 15 million barrels a day. And that's good for the United States. That's good for American consumers. But it's also good for our world partners as well, because we know that growth is only going to go up. The world consumes about 100 million barrels of oil every single day. That number is going up, not down, and that means more investment here in the United States and across the world.
I think if I heard you correctly on those numbers, that is still less than a 3 million barrel a day increase, which is what the Treasury Secretary, Scott Bessent, is aiming for when we're talking about the increase in oil production. Do you think, is that achievable to get 3 million more barrels a day out of the United States?
Look, there are two things that are going to drive increased production in the United States. One is supply and demand. And our members are going to continue to step up to meet the demands of the American people at the right price. But the second thing that we have more control over, and that this administration has more control over, is the regulatory environment. We saw a regulatory barrage under the Biden administration. We're just now recovering from that, and we expect a much more favorable regulatory environment from the Trump administration.
What about, though, on tariffs, right? That is not necessarily something that has been welcomed by the industry, right? In particular, we're looking at oil coming down from Canada to be refined into gasoline that could potentially result in higher gasoline prices in the U.S. for some folks. How are you guys reacting to that, managing around it?
This is an industry that has benefited from free and fair trade, particularly with Canada. And you're right. The way it works right now is that we import a lot of Canadian crude from Canada at a 20% discount, by the way. We get that crude at a discount for American consumers, and then it's refined in American refineries, the most sophisticated refinery kit in the world, and again, sold at a discount to American consumers because it was bought at such a low price from the Canadian market. So this is an area where we have benefited. American consumers have benefited, and we're working with the administration right now on making sure we get our trade policy right with our neighbors. We appreciate what the president has already done, which is to lower that headline number from 25%, a 25% tariff on Canadian crude to 10%, but we want to keep working with them to get it down to zero, and we're confident we'll be able to do that over time.
What does over time mean, Mike? How long do you think it's going to take to get the administration to zero on that already existing exemption, as you mentioned?
Yeah, so they've continued to extend that deadline, and we're going to work with them over the next couple of months to make sure that that deadline that we have it to zero, because it is American consumers that benefit greatly from that free trade with Canada and our other trading partners as well.
So, Mike, I'm curious. Between that back and forth with the administration on tariffs, they are at 10% from Canada and Mexico still, and some of the other dynamics that we've been talking about. Where do you see gasoline prices specifically for consumers looking out, say, 6 months from now, or looking to the end of the year, given some of these dynamics that we're talking about?
Well, look, that's all going to depend on supply and demand. And obviously, if you're cutting supply from other countries, that's not going to be good for payment at the pump for most Americans. So we produce a lot of oil here in the United States. Unfortunately, because we haven't built a refinery in the United States since 1977, that was a much different oil market that we were refining oil in at that point, where we were importing a lot of oil into the United States and production was going down. The situation that we have now is that we have abundant resources here in the United States, mainly because of technological advancements by the oil and gas industry. So we have the supply here. We need to continue to invest in our refinery kit, and we invest billions of dollars in that refinery kit every single year to update it, to make sure that we're becoming more efficient, more technologically capable with the oil that we have both in the United States and we get from our trading partners. But it really does depend on those supply and demand fundamentals, and that's what we're going to be watching over the course of the next few months.